Hey everybody, this is David Skarica. Uh, hope you're all doing good. Today's gonna be an interesting stock chart of the day. I actually originally did this as one of my walks, but then I thought, you know what, this is actually better because this is a really charting orientated one. Um, so I want to show you something here with the market or with gold, sorry. So, we're all waiting here for this gold breakout, right? We're close. Gold was up pretty good today. You can see where I was up $8. We're to 2025. This 2100 level is represented four sell-offs, but you notice that there were two big consolidations, and the consolidation last year was kind of smaller, and this one here has been even smaller. So I think we're getting close to the breakout. So it's kind of similar to this period here when gold kind of sold off a whole bunch of times off 1400. More the 2016, 2017 to 2019 area, and then boom, it broke out. And then you can see when it broke 1400, it went to 2100. So that's 50%, right? And if we go back to the last time gold did something like that as well, we're going to go back 20 years, but I'm going to show you the scenario I think gold's most similar to. You can see that gold both here at around 700, that represented, boom, gold went to over 1,000, about 50%. And here gold, about 1,000 represented resistance in 2008, 2009, and then broke out and it went to almost 2,000 or went to 1,900, went up 90%. And that's not from the low of the move. That's from from the resistance. So this resistance is 50% higher. If you actually take the low of the move, let's say this is a low at 1,200, it was about 60, 70%. This move here from the low was about 150%, and from the resistance was 90%. And here from the low, same thing. This was about 70%, and from the resistance was 50. So basically, long story short, that tells me that gold, we're looking at 3,000 to 4,000 on this next move. Like that's 50 to 100% higher than the prior resistance level, which was what happened. But what I want to really show you is that, a lot of times one reason I do those walks is I just start thinking, I brainstorm. And then so I started thinking about the 2003 period where I remember the Iraq war had started. Gold had moved up into the war. You can see right here, see this move up here, big spike. The resistance at that level gold at that time was about 4 to 450. If we went back to the 90s, which I'll do right now, you'll see that like every time gold got up to above 400, you can see right here, it spent years going sideways around 400, peaked here in early 96 and then fell. So it went back to this on this big move. And then what happened was in 2000, or you can see here, actually here in the sell-off, and then it broke out, and then it continued to break out. We'll see here into 2005. So I think we're kind of where we were in 2003. That again, you can see that again, that resistance of 4 to 425. Gold sold off, and then kind of really broke out in 2004, and then continued higher all the way into 2006. But we're kind of still seeing this, and I'm going to go back to 2003 so we can see it better. We're kind of seeing this kind of move off the resistance, and then we'll break out sometime later in the year. And remember, you see here is about April that gold really started to move. Now, I don't know if we'll go back down to the 200-day moving average, if it won't start till April, but April can make sense because if they're not going to start cutting rates till May, and I've talked about like gold doing well when rate cuts happen, and you can see here, look at the short-term rates, look at that dive they had, the kind of the final rate cuts in 2003. So, and then gold moved right before that, right? You see rates went from just over 1% to about 3/4 of 1%, went down roughly 40, 50 basis points from the beginning of the year into about June of that year. And the 10-year bond, the 10-year bond might have, the 10-year bond, but you can see the 10-year bond dived, and that's when gold started. And then one reason the 10-year bond reversed is because the market made a bottom and, it was more risk on assets. But anyhow, that's kind of where I feel we are now. That I'm going to go back to 2002, and I'm going to end this chart in 2004 so we can see it even better. I think we're in this 2003 period where just like this run up here, we had this run up back to the highs, the resistance. We've seen a bit of a sell off. I don't know if it'll be as steep as this. And then I think we're going to continue this rally really to the end of the year at some point as, as the Federal Reserve begins to loosen policy. Remember, the advantage we have even over now, over 2003, is 2003, that was kind of the end of the rate cut cycle. And the gold was kind of helped by like risk on and reinflation and the stock market going back up. Well, now we're like kind of like at the start of the rate cut cycle. Gold actually bottomed in 2001 and began to move higher all throughout 2001, 2002. But this is kind of where I think we are right now, where we're still kind of butting our head on the resistance. And if that happens, probably sometime this year, we will finally break out, and as well. And remember, these moves are a lot bigger in percentage terms. Like, remember, I moved from 300 gold to 420 back then. That's, that's a 40% move, right? A 40% move now from, okay, let's say when we were at 1800, because, we're not coming from the current level, 40% move from 1800 is roughly 2,500 on gold, or 20% move from here would be like 2,500. So same thing, like about 2,500. So that we have to take that into account, where you might say, oh, this is $100. Well, $100 at 300 is a lot bigger percentage move than $100 at 2,000, right? So, and I just wanted to show you that. And I was just thinking about this spike that we saw recently. I'll get the current gold chart so you can kind of see it. And then this kind of little sell off, like, there's a spike there. Nothing's gonna be exactly the same. That spike happened in kind of like early December, or the one in 2003 happened in January. So like, and then we kind of seen the sell off, and I really like this kind of basing here. Looks like 2000 is acting just like 2000 acted as resistance. You can see here, for forever. You can see here too. Now 2000 is kind of acting as support. So, and again, and the closer we inch to seeing these rate cuts finally happen, I think the gold can finally see that breakout. So, anyhow, so that was today's stock chart of the day. I hope you found this one kind of interesting. For pay members, I've got a really interesting historical stock chart, not really talking about our current positions, but talking about kind of the history, or looking at the Magnificent Seven, and looking history of other times in history when this happened, like 2000 with the big cap tech stocks, the Nifty 50 back in the 70s, the late 20s before the crash, when you had the big companies like RCA and Ford, that sort of thing. So I'm going to go look at a historical perspective. And that's the kind of thing I do. It's not just all about just like trading and trying to make money. I think, to make money, you have to have that historical perspective, So anyway, I hope you enjoyed this. I hope you liked it. I just think, I think that's the kind of way we're shaping up here. We're almost into February already. So probably I would think March, April, you're going to start seeing the gold market sense those rate cuts. And that's when we can start seeing kind of a breakout, and I think this firming up in the gold price and even in crypto has kind of shown us that in maybe the last week or so.